For 80 years, since the end of World War II, one piece of paper has ruled the entire planet with absolute authority. The United States dollar. It determines the price of your oil, your food, and your technology. It allows the United States to borrow limited money and live beyond its means. And as we saw in our previous series, it acts as a weapon through the SWIFT system. But for the first time in history, a serious challenger has emerged to fight this dominance. It is not a single country, but an alliance of nations that represent the majority of the human population, BRICS. Originally, it was just Brazil, Russia, India, China, and South Africa. But recently, the club has expanded, inviting powerful energy giants like Iran, the UAE, and Saudi Arabia. Western media often dismisses BRICS as just a talk shop with no real power. But hidden logic tells us to look at what they are doing, not what they are saying. And what they are doing is preparing for a world without the US dollar. In this deep dive, we are going to analyze the war for the future of money. We will explain why central banks are buying gold at the fastest rate in 50 years. And we will ask the trillion-dollar question: can BRICS really replace the dollar, or is it a fantasy? To understand this rebellion, we have to go back to the weaponization of finance. When the US froze $300 billion of Russian assets in 2022, every country in the global south felt the cold shiver down their spine. Saudi Arabia, China, and Brazil all realized a terrifying truth about their savings. If the US can steal Russia's money, they can steal ours too. Your money, a US bank, is not really your money, it is permitted money. This fear triggered the trend known as De-Dollarization. It does not mean the dollar will disappear tomorrow morning. That is impossible. But it means countries are starting to trade in their own local currencies. China and Brazil are trading crops using Yuan and Real, bypassing the dollar. India is buying oil from the UAE using rupees, leaving the dollar out of the loop. But the biggest blow to the dollar came from the desert kingdom of Saudi Arabia. For 50 years, the Petrodollar agreement meant that Saudi Arabia sold oil only in US dollars. In exchange, the US provided military protection to the Saudi kingdom. But recently, Saudi Arabia announced it is open to selling oil in other currencies, like the Yuan. If the world stops needing dollars to buy oil, the demand for the dollar collapses. And if the demand collapses, the value of the money in your pocket drops with it. I want to pause here and ask you about your own financial confidence. If you had $1 million of savings to protect for the next 10 years, would you keep it in US dollars, gold, or Bitcoin? The world is losing trust in fiat currency. Let me know your choice in the comments below. So, if nations are moving away from the dollar, what are they moving towards? They are moving back to the only asset that has no counterparty risk, gold. In the last 2 years, central banks, led by China, have bought record amounts of physical gold. They are trading paper promises US bonds for hard assets gold bars. There is a rumor, a strong theory, that BRICS plans to launch a new trading currency. Some call it the unit or the R5, and they say it will be backed by gold and commodities. Imagine a currency backed by Russian energy, Chinese manufacturing, and Brazilian agriculture. It would be the strongest challenge to the fiat dollar since 1971. However, we must be realistic and look at the massive problems inside BRICS. The Western media is right about one thing: BRICS is a messy and divided family. The two biggest members, China and India, are geopolitical rivals who kill each other's soldiers on the border. As we discussed in the previous video, India does not trust China and bans Chinese apps. How can you have a common currency with a country you might go to war with? India does not want to trade the dominance of the US dollar for the dominance of the Chinese yuan. They want a multipolar world, not a Chinese world. This internal conflict is the biggest obstacle stopping BRICS from killing the dollar quickly. Furthermore, the US dollar has a massive advantage called network effects. The entire global banking system, debt market, and investment world are built on dollar code. Replacing it is like trying to change the operating system of the internet while it is running. It is messy, expensive, and incredibly difficult to do without crashing the system. So, what is the most likely scenario for the next 10 years? We will not see a sudden collapse of the dollar, but a slow and painful fragmentation. We are moving towards two separate economic blocks. One block led by the G7, using the dollar, euro, and SWIFT system, and another block led by BRICS, using gold, local currencies, and a new payment system. This means global trade will become more expensive, slower, and more political. It means that inflation might be here to stay because the euro-cheap global trade is ending. But while the giants fight over money in the boardrooms, there is another battle happening on the ground for the physical resources of the future. We have talked about chips in Taiwan and manufacturing in India. But you cannot build chips, phones, or electric car batteries without raw materials, cobalt, lithium, copper, rare earth elements. And there is one continent that holds the key to the green energy transition. A continent that has been exploited for centuries but is now becoming the center of the world, Africa. Russia is sending mercenaries there. China is building railways there. And the West is trying to return. In our next video, we are going to look at the scramble for Africa 2.0. We will expose the dark reality of where your electric car battery actually comes from. See you in the Africa video.